Hello, hello. Hi, everyone. Thank you guys for joining another live stream about NIO earnings. Please let me quickly know in the comments whether or not everything works with the setup, with the microphone and so on. If you're watching this one later on, right now, this is a live stream, but available as a recording. I scheduled it a little bit later so that people who are now waking up in the US can join. In about 1 hour, there will also be the conference call with NIO, so I'll do a separate video for that. This video now is only about walking through the earnings report. Let me know. Yeah, everyone can hear me. Good. Great. So we can start. Once again, thanks for tuning in for this quarterly report of NIO during turbulent times in the markets. So NIO's selling off with the rest of the market. Lots of things going on in the crypto space currently, which might be quite contagious. But let's focus on the fundamentals here, although this is not a market focusing much on fundamentals right now, to be honest. Anyways, the news release came out this morning already. Since I had some time to walk through it, I can give you my thoughts about the details here. But let's start here with the headlines. And yeah, by the way, I see your comments, but I guess I will do some sort of Q&A by the end, not so much during the beginning of walking you guys through the numbers. So here are the top line headlines. Basically, they missed on the bottom line, the EPS, and beat on the revenues. So a slight beat, 50 million more revenues than expected. And for the earnings, it was a miss by 14 cents. So this is like the bigger picture in contrast to what are the estimations by Wall Street or the analysts in general. But now let's see firsthand from the source, yeah, what's been the notable details here during this quarter. And the good thing is we always kind of know already what to expect when it comes to the revenues, because they are quite accurate, usually based on the sales data that we have beforehand. So that's not an issue, right? So vehicle sales with the 1.6 billion, that isn't a surprise at all. What is rather interesting to watch here is the vehicle margin, which is 16.4%. And if that's compared to what's been the quarter before, I think that was 16.7%, right? This is the line where I track the sales margins for the vehicles. So 16.7% in Q2, actually, slightly down this quarter, 16.4%. So I would say that this is kind of a disappointment there, because actually during the last earnings call, we were already hearing from the management that they kind of said like, yeah, our margins on the vehicle side have been under pressure because of supply chain issues, because of the inflation, of course, everyone's feeling that, and mainly due to battery cost. And but they guided actually to see a slight recovery during Q3, and that didn't happen. I mean, okay, it's just very it's basically flat, right? It's a 60% margin, but it's also not showing the kind of an upwards trend again in the vehicle margin. And that was kind of what personally I was hoping for to see. So my interpretation of that is there is still too much going on in terms of switching from the old platform to the new platform, too many models produced. And also one implication that I noticed is, if I look at my KPI watch here, for the average sales price, if we just divide the US dollar, the reported US dollar sales price by the number of cars that they have sold, that's slightly down this quarter, or the Q3, from $57,000 on average down to $53,000. That's actually quite significant. I need to look into that, whether or not there could be implications because of the strong US dollar. So of course, NIO gets RMB as paid by their customers. And so there might also be a little bit of a weakness in here. But actually, there might be some implications in terms of that they either had a sales share that is towards more low-cost vehicles, or they had some discounts and sales offerings, which, by the way, I haven't seen, frankly. So that would be something to dig into deeper, like what exactly is putting this pressure on the vehicle margins and on the average sales prices here. Let me see the explanation. Maybe we get some insights to that into the quarterly report, actually. But let us just quickly check here. What is the report explanation? The decrease of vehicle margin over the third quarter of 2021, so last year, was mainly due to the increased battery cost per unit. So this is the same argument as last quarter, which partially offset by the decrease in subsidization in user vehicle financing arrangements. Okay, so they would have actually had even worse battery cost implications there, but could have offset some of it. And vehicle margin remained stable compared with the second quarter of 2022. So that's their interpretation there. That's kind of flat vehicle margin. Anyways, I do think, like, looking forward, and I mean, now that's in the books, it's how it is. But looking forward, I would say we should actually expect an ongoing increase for vehicle margins again, simply based on the fact that once the factories are, again, in sync, up and running, and I've been reporting about all those ongoing issues there. Once that's happening, then of course the vehicle margin should increase, and also with this switch to the NT 2.0 platform models, which they are more simple in the platform, and then they should actually in the end also have larger scale effects in this regard, and therefore should show improved margins. Okay, back to that. That's actually all that I've highlighted here. Let's look on the cost side a little bit more in detail, but first look at the CEO and CFO comments. So I highlighted here that Lieben said, "We have witnessed strong growth momentum in user demand and robust foot traffic, especially after the debut of the ET5 in stores from September." So I think this is kind of to saying something that can calm the nerves of investors here, because of course there's also lots of speculation whether or not there are demand issues. So the CEO is addressing it specifically here, outlining, look, we don't have a demand issue. We see actually a good growth momentum, especially for the ET5. But as you know, the ET5 ramp up has been interrupted so far with the COVID situation in Hefei. And if you've seen my video yesterday, it seems like they're just getting in full swing again for the ET5 there in the second factory. What else? We expect that the ET5 delivery will support a substantial acceleration of our overall revenue growth in the fourth quarter of 2022. We'll come to that in a minute. And to meet the demand and to meet the growing user demand and shorten the waiting time, we have been working closely with supply chain partners to accelerate production and delivery. So we've seen that actually some of the wait times have been coming down. And also, if we look at the weekly license plate registrations, there seems to be an uptick in both ET7 and ES7, as well as the ET5 production numbers. So that points to the fact that actually they got rid of some of their problems here with the supply chain partners. Notably, the ET7 had an issue around casting, right? And we'll see whether or not the ET5 can actually accelerate production as well. That's from the CEO and CFO comments, what I've highlighted there. Then on the other sales, that was quite interesting. They came in at 150 million, so quite a bump there. The decrease in other sales over the third quarter of 2021 was mainly due to the decreased revenue derived from sales of the automotive regulatory credits. So they have sold less regulatory credits, but they also had an increase of other revenues in line with incremental vehicle sales. So usually when they sell vehicles, for example, they sell also stuff like the home chargers. I think around 70% of people also get a home charger. That's contributing some of the other sales. However, still, I'm always looking to these other revenues, and what I'm missing is a breakdown also for something like the merchandise, the e-commerce revenues. I think they might be still too low to actually break them out, but there is not much insight, unfortunately, like what's exactly in those other revenues. I would love to see more detail on that, because I think ultimately in the long run, this could be a very, very interesting contribution to the overall revenues. Then the increase of the other sales compared to the last quarter in this year was mainly attributed to the increase in revenue derived from sales of automotive regulatory credits. So that means they actually started to book some of those regulatory credits. So usually how it works is they're accumulating them, and then they have to negotiate with some of these buyers of those credits, and then from time to time they start adding that on top. So that's a positive there. Regarding gross margin, here's some explanation. So that one came in at 13.3%, just a slight increase over the last quarter, and a decreased revenue from sales of and is attributed to the decrease of revenue from sales of automotive regulatory credits compared to last year. So last year they booked more of those, and they are very high margin, so they usually add to those gross margin implications there. There's no explanation why they chose to, for example, book less right now. Maybe they are forwarding that to the next quarter, could be possible, or the quarter afterwards. But with the more and more volume they have on those cars that they're selling, the more of those credits they're obviously also accumulating. But this one is not an ongoing revenue stream. All right, I already talked about the vehicle margin. Now let's talk about some of the expenses, which came in quite high again. For example, here more than 400 million for research and development expenses. So if we compare that to the last quarter, so R&D, last quarter was 320 million already, an increase again. And now they are coming in even above that, more than 400 million. And I just quickly summarized it here. They spent already 1 billion in R&D this year. And the initial plan going into this year was spending around 500 million, if you remember. But then they decided to accelerate R&D, which I think is actually, it's a good thing, because, of course, at some point in time, the R&D will pay off in terms of new products, new innovations, possibly efficiencies. So R&D spending is generally a good thing. I think in general, you've seen all of the hiring going on, especially in Europe, with, for example, coders, people working on NIO Power, NOMI, translation into English and German, all of those require people working on that. And so that's where those expenses are coming from. What is now crucial to see at some point in time is where will this actually flatten out, because this cannot increase like that forever, because this is, of course, putting pressure on NIO's profitability and break-even prospects there. So will be interesting to see for Q4, or maybe we get some insight also during the earnings call, whether or not they have plans of stabilizing this at some point in time. I could also imagine that lots of this is due to working on new models. So NIO is working on 2 new sub-brands, at least according to rumors. And I do think they're actually also working on 2 new models, actually, and also the overhaul of their current platform based on all of the pictures and rumors that we're seeing out there. So if you remember, for the ET7 and the ET5, when they do stuff like the winter testing, all of that's consuming money. So it's natural for this to kind of occur at the current stage. However, certainly, one of those things that you don't want to see to grow exponentially, right? Maybe in contrast to that, and that is actually one of my more positive lines here is, although it's going up, selling general administrative expenses, so SG&A, last quarter was 340 million, now 380 million. So that's an increase again. However, if you look at, if you're comparing that to the cars that have been selling, so this is actually the SG&A per vehicle sold. It's actually in a downtrend here because they've been selling more vehicles again, but the SG&A has only increased slightly. So that's actually good because that's where marketing is going in, stuff like NIO houses, all of those kind of expenses. So it seems that the pace of selling vehicle is now outpacing the growth in what they are spending on marketing fees. So that's actually very important for the profitability prospects at some point in time. So it would be worrying if that number would keep on growing. It's slightly down, so it could trend up again a little bit, but as you can see, it's flattening out at some point in time here. So despite the fact that this one has been going up here, SG&A, it's actually not a too high number here, I would say. So they claim here increase in personal cost for sales and marketing, increase in company sales and service network, right? So the service centers, the battery swap stations, and marketing promotional activity in China and Europe. So we had NIO Day in Europe. All of this stuff is costing money. So compared to that, this shows a little bit of cost savings there, I would say. Then an interesting one, that one I actually didn't have on my radar at all, share-based compensation expenses. So for the third quarter, 86 million. So share-based compensations for, I would guess, for their employees who are receiving that. And then also share issuance here. On August 23rd, they converted shares for a convertible senior note due 2022. So it seems like instead of paying back some of their debt, which they got for these convertible notes, instead they converted that one into shares. And also here another one. 18 million Class A ordinary shares have been also, what's the right word here? They have been issued, to facilitate future exercise options and incentive awards, so of the share incentive plan of the company. So, well, there would be some work to do to look more into specifics of what is the share compensation plan for the employees for NIO and stuff like that. But that's certainly, should also would have put some pressure on the share price, I guess, because that's essentially diluting shareholders, I would say. And frankly, I wasn't expecting this or wasn't preparing for that. So that's an interesting point here, which needs more investigation in terms of how this actually is also putting pressure here on NIO in terms of the results. Now, I think that one is the most important part. That's the first part which I actually looked up immediately, was what will be their business outlook. And they're guiding for 43,000 to 48,000 vehicles in Q4. And of course, everyone is kind of worried about deliveries. And as we know, last quarter it was 31,000, and then in October we had the issue again with the lockdowns in Hefei, at which supposedly the factory was down a couple of days, actually both factories. And of course, there was a question whether or not they can get the cars in or out. And there are, of course, also implications for the supply chain. And now with their guidance here between 43,000 and 48,000 for the whole quarter, that would mean, this month around 15,000 and then 18,000 maybe in December, or up to 22 123,000 in December, bringing the whole year between 125,000 vehicles and 130,000 vehicles, or year-over-year revenue growth, or no, sales growth of between 37% to 43%. So, wow, that's actually, given all of what's going on, I wasn't really expecting them to give such a big guidance here. Of course, I'm happy to see that, but I mean, it's still below to what going into the quarter I think everyone would have expected. So I have an old best case here around 142,000 for the whole year, which would have been more than 50% growth. But with all that's going on, just if there's another lockdown in Hefei, that can be quite severe, and so they have lots of work to do. I don't know whether or not they can actually meet this. It's an operational problem there in terms of can they deliver as much, can they produce as many, but certainly they're guiding for it, and so that's a very, very, very positive, very bullish takeaway there. Should clearly be driven by ET5 ramp and sales, I would say. The big question is like, how much can still the old models contribute, because the NT 2.1, NT 1.0 platform is actually decreasing in sales. It seems like the Chinese consumer just looking more and more for the latest model. They always want the latest stuff, and possibly this is also one of the issues why we see, for example, Xiaopeng, Xpeng lacking a little bit right now, and also Li Auto had issues with making this transition from the older model to the newer model. So that's an ongoing theme right now in China, that all of those startups are now transitioning to new platforms and new models, and it's not an easy task, to be honest, both on the sales side as well as on the operational side, like what this means for the factory. But okay, let's see. Maybe you get additional comments by the CFO and CEO on how they think that this is realistic. If that would be the case, I think that would be kind of a good year in the end for NIO, because giving you a little bit of context here. So, and I know I'm always saying, like, don't compare Tesla to NIO. They're fundamentally different companies. They are serving a different purpose, a different vision, and in my point of view, also increasingly a different customer segment. But just to give you a little bit of a context of what it means to scale as a startup. So here you see the Tesla year-over-year growth in the number of years of existence. So when Tesla was founded, of course, they were not founded in, or was it? No, of course not in 2018. But in the number one year of existence, growing to the second year and so on, they grew usually between, let's say, 40 to 60% year over year, right? And so that would be, in comparison to that, it would be a lower year for NIO as well. In this regard, they would not be growing 100% year over year, how I personally have expected that actually going into the year. But with all of that, what's happening, you see, for example, Tesla was growing once in the year 5 of their existence from 76,000 annual deliveries to 103,000 annual deliveries. Now, if we look for NIO, in the last year, it was like, how much did they sell? 91,000, and they could sell now between 130 to 100, let's say 130-ish thousand. So that would be similar to one of those years where of Tesla year 5 to 6 of existence. So always need to see this kind of in contrast. And then on the other hand, like where NIO currently is, they're actually kind of growing faster to what Tesla has been growing back then. But once again, we'll see going forward. NIO is certainly struggling right now. I don't want to be overly making the situation looking better than it is. I think they have lots of work to do, and who knows what next year brings, right? But I just want to give you a little bit of context here in terms of expectations and so in general. These are most of the highlights that I had, I think, from this overall report. What else? Maybe if I look a little bit in the KPIs here, I already talked about average sales price, the SG&A. So what has increased are, of course, the R&D costs per sold vehicle slightly. Is there something else in there? No. All right. So all in all, certainly not a pretty quarter. Most of it's already baked in terms of the vehicle sales. Not many really positive surprises that are very prominent, not a jump in margins there, not a decrease in cost. Can it be argued why the costs are increased? Yes. Is there an issue with the ongoing net loss? Surely isn't nice, but once again, Tesla was also losing $700 million a quarter during their ramp up before the Model 3 was scaling. So, one thing to watch here is, of course, also the balance, the cash balance or cash equivalents, which have been going down now from Q4 2021, from 8.7 billion down to 7.2 billion right now. So this is how it looks visually, just very quickly. So yeah, of course, we need to take that into consideration. The cash will be increasingly burned, and certainly a thing to watch. Is it a big problem right now? No, there is still a long runway. They could keep on burning cash like this for some time without facing the issue of going bankrupt. That's for sure. I think it might be one of the reasons why, obviously, NIO chose to not pay back some of the debt, instead issue shares for this convertible bond, or maybe it was also the wish of the bond holders. Who knows? But certainly, something to watch out there. Of course, when will they have chances to break even going forward? This can only happen, of course, with increased volumes. Now the ET5 is very important for that, ES7 and the ET7, and then with the new models next year, hopefully everything transitioning to the NT 2.0 platform should once again increase the margins. Also, I would like to highlight that, of course, we should see a decrease of inflationary pressure with the battery cost, which they're claiming here, because we see lithium prices, for example, going down already. So overall, it is challenging for NIO. I think that's also reflected in the share price, especially now that the market is not very much forward-looking. You're looking at what kind of cash flows you can get as soon as possible. Right now, the discounting mechanism has changed since interest rates are rising. So this is putting pressure on NIO. But on the other hand, some positives there also with, let's see that the outlook. Right, maybe time to look to take some of your questions before I wrap it up here, because then there will also be the conference call, which we can listen together in a second stream, I would say. I think I will I think I will make a separate stream for that. Okay, I'm reading some of your comments right now. Here's Scott, who is boiling it down, like spending money on success, then it's good for forward guidance, or good forward guidance. Yeah, I think the forward guidance was really the positive takeaway here. I mean, in a worst case scenario, they could have come out today and said, like, it's not looking good for Q4 based on all the issues we're having with the factory. Maybe there could have been also a slowdown in demand and stuff like that, but they haven't said so. On the other hand, also take it with a grain of salt. I mean, they're saying it like it, but will they be able to execute on that? I think there are lots of question marks around that. And also, we had a couple of statements over this year so far with NIO where they didn't actually fulfill our expectations in terms of, one example would be the margins, the vehicle margins, which I just mentioned last conference call. They said like they could tick up already in Q3. Well, they didn't, although they are flat. Then also we had the CFO, I guess, with a Credit Suisse talk very of the beginning of the year, basically pointing towards more or less a 100% year-over-year guidance there, and that certainly isn't the case. Of course, you couldn't know that Shanghai would be locked down totally and lots of things, but yeah, maybe at some points they have been also too high on the expectations, and but frankly, we as investors haven't been different, right? Okay, here are a couple of questions. If I will cover the conference call, yes, I will. I think I will set up a second call to that. Just that this stream is not getting too long, and people who want to watch it later on have like two separate videos to watch. What else? Let's see if I find some questions or comments. Exactly, I've been talking about the cash reserves here, that they have come down significantly. Yeah, what you need to know there is also because of the accounting, there can also be sometimes lags in the way that they're booking those kind of quarterly cash differences. But in general, it seems the cash burn is more or less between 400 to 700 million per quarter right now, more or less. Yeah, here's a comment around the European sales, and yeah, I don't know. Correct me if I'm wrong. Maybe I haven't seen the commentary in here, but first of all, there is also no line for Norwegian sales or euro sales in euro or other currencies. Also not for the subscriptions. Well, of course, in Q3 they haven't started with that, but maybe at some point in time it would make sense for NIO to start splitting up the income and revenues lines there a bit more. As I mentioned, I would also love to see that for the other revenues as well, but maybe some of these revenues are just too tiny, too small to break them out currently. So right now, all of the focus still on the RMB sales, on the Chinese sales. Okay, here's another comment. Expect margin to go down a little next quarter as outpocket of the credit. Yeah, not so sure. Maybe the going down of the inflation will actually be the more important one here. I've seen the report, and the margin going down is not looking great. The margin is actually flat, but yeah, to be honest, I would like to see margins going up again towards the 20%. NIO is ultimately guiding for 25%, but yeah, I guess we'll see that maybe towards the end of next year. Give it some time. Howard saying these are mixed results. Thanks, Alberello, for your comment here. Yeah, I don't have a donation button here, but if you want to support the work that we are doing, for example, the footage yesterday in Hefei, and also all of the investigative stuff that I'm doing, feel free to become a patron. There are 2 tiers, and I would recommend to get a $10 per month tier, because then you can get a link and you join our Patreon community, where basically we have like everyday conversations, even on days when I don't make a video. And I post due diligence and ongoing stuff in there before I can make videos about it. And it's a good community there. So I recommend that, and thank you for all of the supporters staying loyal here. I really appreciate it. Dirk would like to know more about the sales in Europe. Yeah, basically you can track the sales for Norway. I think there are around 1,000 sales right now for this year. As I mentioned, like they don't really matter yet. Why do I not compare to BYD numbers? Well, that's an ongoing theme on my channel here. I think it doesn't make much sense to compare NIO to companies that are selling very low priced vehicles, let's say around 200,000 RMB. That's where the bread and butter is for brands like BYD, Xiaopeng, or 200,000 to 300,000 RMB, that segment, which is obviously a mass market. NIO vehicles are premium to luxury vehicles that are, much higher, actually close to Mercedes-Benz in terms of the average sales prices, even higher than Tesla's average sales prices. Tesla has now cut their prices as well. Again, in China, I think it's just a very natural transition in terms of the positioning. I think NIO is much closer to imitating, let's say, on the quality side of the vehicles, something that you would expect for, let's say, a German brand, so BMW, Audi, Mercedes. I think these are the competitors to benchmark, and compared to them, actually, NIO is doing very well on the benchmarks there. For example, their sedan models, the ET7, ET5, they are right now doing very, very well compared to their competitors in this league. It doesn't make sense to compare that one to vehicles that are priced very low because, I also don't compare, speaking literally, jiaozi or, those dumplings with a high-end cuisine meal where people pay more for it, right? So, of course, NIO is not about volumes right now, but also with the ET5, we're now seeing that they're coming down into a younger target segment and also a less pricey target segment. So this will be driving sales, of course, and we'll see what NIO comes up with for their two sub brands, which might be more positioned towards a Tesla, a BYD, a Volkswagen, and Xiaopeng ultimately. But for now, I think that's not the main priority of NIO. So, what else? Maybe one last question before I wrap this one up, before I set up another stream for the conference call where we can listen to it together. I think that should be in 10 minutes, right? Yeah, I don't see. Maybe here a COVID question. What is this one? If you take out the macro environment and zero COVIDs, are there any areas where you feel NIO is not delivering, Marcel? That's a very good question. Let's see. Thank you for this question. Hmm. I actually have to think about this one. So certainly, of course, I was also expecting more for this year in general, and then you could clearly see that other companies were handling the COVID situation better. However, also other companies didn't have a factory in Hefei, which was, down in the last quarter, obviously, or the last month. So sometimes you can blame NIO for it, sometimes you can't. I don't know. Maybe in terms of shareholder communications, they could have done a better job sometimes. I see that there are people disappointed by some of the issues out there, and that there is almost no communication from NIO's side. So I'm sometimes feeling like I'm doing the job for NIO there and trying to explain things. And that's obviously always just my personal opinion and not an official line. So, but on the other hand, I see the same from Tesla shareholders whenever things are going wrong. For example, Tesla's also a huge drag on the share price right now with all of the shambles of Elon and stuff like that. And there's also no official communication from Tesla there, right? So I see the same complaints. It's always like, if things are going great with deliveries and the share price, then no one complains. But if it's down, then of course people are disappointed. I want to know more. And so, yeah, communications in general. I also see some comments here that NIO not having as many subscribers, for example, on YouTube, but I guess maybe YouTube or Twitter. I think maybe the NIO social media team, could actually ramp these kind of communications up a little bit if there's a way to do that. But that clearly isn't my main, let's say, my main negative take on NIO there, or my main criticism there. I don't know. Actually, what has been a bummer for me is more like, let's say, didn't deliver the hybrid solid state battery on time, pushed that one forward. I could only rumor about why this is the case. So maybe, as also Tesla hasn't delivered on the 4680 cells yet, maybe another reason to roll that one out yet, waiting for until the production is ramped up a little bit better. No news on the autonomous driving subscription so far. Actually, it was supposed to be launched in this quarter. Maybe you get some clarity on that on the earnings call. So sometimes I know there's a little bit of a lack of catching up with what they have previously promised. But on the other hand, I'm also in Tesla, and if you see like how many years FSD promises, Cybertruck promises, the Tesla Semi promise, and stuff like that have been, pushed forward and forward. I think that's just a natural thing in as a startup, that usually the deadlines you're setting are maybe a little bit too ambitious, and then you cannot hold them true. So yeah, that's a risk as investors. So holding them accountable for what they previously said, but maybe also dial down and back a little bit on our own expectations based on what they're saying. Sometimes they might be over-promising, but to be honest, that was always something I liked about NIO, that they're not usually over-promising and then not delivering. So also with their guidance, usually that was on really, really meeting those guidance as usual. But going forward, we'll see if they can stick to it. How can I say that NIO is a startup if they make monthly 10K deliveries? So, well, you are in a legacy automotive industry there, which is dominated by players that have been around really many years, and it's very tough and hard to break into this automotive industry. Actually, that wasn't even possible until Elon Musk did it. And so with the switch into electric vehicles, that's a unique opportunity there. And I think unless a company is really profitable, like Tesla just recently, I would say now Tesla is transitioning from startup to maturity in a way, continuously delivering some profits at least, not great profits yet, but some profits on the bottom line. And NIO is certainly not there yet. NIO could fail. NIO could go bankrupt still. So certainly NIO is a startup. Their products are quite new. And many things could still go wrong. So it is really like investing in venture capital at this point in time. Not an established company, my point of view at all. But comparing to, let's say, Xiaopeng and Li Auto or some other companies, the newer companies in China, increasingly my feeling is that NIO has quite good prospects of making it and jumping the gap and making it to the other side of become an established player. For example, but I don't want to go too much in comparison there. But for example, with the brand of Xpeng might be an issue with Europe. With Li Auto, the issue might be that they never committed to batteries, full electric vehicle products. So NIO doesn't have those problems to carry around. They have different issues on terms of scaling operationally, which this year clearly showed they had issues. All right. I'll wrap it up here. 5 more minutes till the next earning call. Please subscribe to the channel and push the bell button, and so you will also get a notification for my next stream. I'm gonna set it up now for the earnings call, and we can listen to it together. It will be around 1 hour before market open, and then also I will give my commentary around it. And so thanks for tuning in. I really enjoy your interest here and your support and all of your questions. And then see you in the next stream. Thank you, guys.